Your phone buzzes. It's a message from your bank. You check it and your stomach drops. Your account balance is dangerously low, but rent is due, your car needs repairs, and you just remembered your best friend's birthday is next week. Sound familiar? Most people don't plan for these expenses, so when they hit, they scramble for cash, swipe their credit cards, or dip into their emergency fund. But what if you never had to stress about unexpected expenses again? What if you had a simple system that ensured you were always prepared without struggling to save? That's exactly what sinking funds do, and by the end of this video, you'll know exactly how to use them to transform your finances forever. Introduction. Sinking funds might just be the single best financial tool you're not using yet. It's like having a secret weapon against unexpected expenses. Most people think saving money is just about putting everything into one big emergency fund. But what if I told you there's a way to be even more prepared without feeling like you're constantly struggling to save? That's where sinking funds come in. What is a sinking fund? So, what exactly is a sinking fund? It's simply a pool of money set aside for a specific expense. Unlike an emergency fund, which is for unexpected surprises, a sinking fund is for things you know are coming. Car repairs, home maintenance, holiday shopping, vacations, even your next phone upgrade. Sinking funds let you plan for these things in advance, so you never have to scramble for cash at the last minute. Think of it like this. Instead of being blindsided by big expenses, you break them down into bite-sized chunks. Want to buy a $1,200 laptop next year? Set aside $100 a month, and when the time comes, you can pay in full without a second thought. No credit card debt, no financial stress, just smart, strategic planning. Why you need sinking funds? Still not convinced? Let's talk about why sinking funds are a game changer. 1. No more debt. The biggest reason people go into debt isn't reckless spending, it's unplanned expenses. Sinking funds eliminate the need to use credit cards for big purchases because the money's already there. 2. Less stress, more control. Financial stress is real. Knowing you have money set aside for expenses before they happen gives you peace of mind and full control over your finances. Instead of constantly worrying about whether you can afford something, you can focus on enjoying life without financial anxiety. 3. No more guilt. When spending, ever felt guilty about spending money even when you needed to? With a sinking fund, you don't have to feel bad. You plan for it. You save for it. You can spend it guilt-free. Imagine finally booking that dream vacation or buying that new gadget without feeling financially irresponsible. 4. Better budgeting. Instead of random expenses throwing off your budget every month, sinking funds allow you to plan for everything in advance. Your budget stays consistent, predictable, and manageable. When every expense has a dedicated place in your financial plan, unexpected bills won't knock you off track. How to set up sinking funds. All right, so how do you actually set up sinking funds? It's easier than you think. Here's a simple, step-by-step process. Step 1. Identify your sinking fund categories. Start by figuring out what expenses you need to save for. Some common sinking funds include car repairs and maintenance, home repairs, Christmas and holiday gifts, birthdays, vacations, back-to-school expenses, medical expenses, subscription renewals, large purchases like furniture, appliances, or a new phone, annual insurance payments or memberships. Take a moment to think about your own life. What big expenses do you know are coming? Make a list. The more specific you are, the better you can prepare. Step 2. Set a savings goal for each fund. For each category, decide how much money you need. If you plan to spend $1,000 on holiday gifts, set that as your goal. If car maintenance typically costs you $500 a year, that's your target. Don't guess. Review past spending to get an accurate estimate. Step 3. Break it down into monthly savings. Now take your total amount and divide it by the number of months until you need it. If Christmas is 10 months away and your goal is $1,000, that means you need to save $100 per month. If you need $600 for annual car maintenance, save $50 per month. If an expense is unexpected but inevitable, like medical bills, allocate an affordable amount each month. Step 4. Choose where to store your sinking funds. Where should you keep your sinking funds? You have a few options. A dedicated savings account. Some banks let you create sub-accounts for different goals. Cash envelopes if you prefer a physical approach. A budgeting app that tracks multiple savings goals. A spreadsheet if you like manual tracking. Keep it separate from your everyday spending money so you don't accidentally use it. Step 5. Automate your savings. Make it easy on yourself. Set up automatic transfers to your sinking funds every month or every paycheck. This way, you don't even have to think about it. It just happens. Automation removes the temptation to spend the money elsewhere. Common mistakes to avoid. Even though sinking funds are simple, there are a few common mistakes people make. 1. Not being specific enough. If you just throw money into a general savings account without clear goals, it's easy to spend it on the wrong thing. Label each sinking fund clearly to stay on track. 2. Underestimating costs. Be realistic. If you think car repairs will only cost $200 a year, but they usually cost $600, you'll still end up short. Look at past expenses and build in a little extra just in case. 3. Dipping into funds for the wrong reasons. If you save for a vacation but use the money to buy a new TV instead, you're back to square one. Stay disciplined and only use the money for its intended purpose. 4. Not adjusting your plan over time. Expenses change. If you get a new car, your repair costs might go down. If you have kids, holiday expenses might increase. Review and adjust your sinking funds every few months to ensure they align with your current needs. 5. Forgetting to refill funds after use. Once you use a sinking fund, don't forget to start saving again. If you empty your car repair fund, start refilling it immediately so you're prepared for the next expense. Final thoughts. Sinking funds are the ultimate financial hack. They give you control, eliminate stress, and keep you out of debt. The best part? Anyone can use them. Whether you make $30,000 a year or $300,000, sinking funds will make your life easier. So here's your challenge. Pick one sinking fund to start today. Just one. Set a goal, break it down, and start saving. A few months from now, you'll thank yourself when that big expense comes and you're 100% prepared. If this video helped you, don't forget to like, subscribe, and share. More money tips coming your way soon. Stay smart, stay prepared, and I'll see you in the next one.